Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and datasets and earnings for May 28th, 2025. And with that said, let's go ahead and jump straight into it. Let's see if it pulls up. Sorry, my screen's not working correctly. Okay, there we go. Alright, so at 4 a.m. we have Fed member Kashkari speaking. He can say some pretty crucial stuff, so if he does say something important, we will see the pre-market react to it accordingly, whether it's, hawkish or dovish. And by hawkish, that means, more towards a stance of holding tight on the yields or interest rates or, potentially increasing. And dovish being, the opposite, the softer side of pausing the interest rates and cutting rates. So we will see what he has to say. We'll know, like I said, in the pre-market. Then we have Fed member Williams speaking. He is speaking in the pre-market, but pretty close to open. Only 30 minutes away until open. So he definitely can say something fairly important. It's just very important right now to be listening to all the Fed members. And if you don't listen to them, uh, I know everybody can't listen to their speeches. At least, read a summary on Bloomberg or, the unusual whale bot, something like that, just so that you have a summary of what these, members are saying. Now, we have the 5-year note auction. Let me see what the auction was today. So we saw the 2-year note auction, and this is actually a very, very high increase, um, a whole 0.2% almost. So very, very large, um, especially for the short term. That's not something we want to see. So very likely we are going to see the 5-year note auction come in very, very similar, very likely pulling up towards that 4.1%. That's not a good thing. That is bearish for the market. So we will see how that performs. Now, just keep in mind the Fed did do a massive treasury buyback just a few days ago. Let me tell you the exact amount I have in my phone. One moment. It was $43.6 billion of treasuries that they bought, and that was the long terms. So that generally means, excuse me, I'm losing my voice, but that generally means like the 4-year through 10-year treasuries. That's generally what many of these nation states are kind of hoarding. Shouldn't be the word, but stockpiling. Some of these nation states stockpile a lot of the 20-year, 30-year, but it's really that 10-year that's super super key. And this 5-year note auction will kind of help us see if the treasury market is going to further believe that this Fed's QE is going to be detrimental to the treasury auction or treasury market. Um, just to kind of circle back on the whole Fed point before I go over the FOMC meeting minutes. Uh, we're in a really peculiar spot, and I'm going to talk about this a little bit later in the video. Uh, kind of where we are in a position right now where the Fed has the ability, and the United States as a whole has the ability to either kind of just wash out the treasuries, and we are going to do a very large buyback at a high yield, and we will be paying a higher debt or a higher interest rate on our debt. That's not a good thing for the market. That's not a good thing for the economy. Um, the the reason for that, the reason for these buybacks, is because China and Japan are basically selling these uh, in mass right now, and Japan hasn't fully pulled the trigger yet, but potentially that could be happening at any moment. And if we thought that the event at the end of July, early August in 2024 was bad, then we really haven't seen anything yet, because if Japan starts really just dumping their treasuries, then we're going to have to be spending um, potentially hundreds of billions, if not close to $1 trillion, just to buy up our debt. that we're, already spending a premium on. So you know, that's pretty bad news, right? The other route is they kind of just allow yields to continue pulling up, and they totally refocus um, their full policy on growth and basically just pushing out massive growth and continuing to basically empower, you know, um, each individual and increase our ability to spend in a way that's not debt spending. Um, I'll talk about that a little later, maybe in this video, maybe in another video, but potentially the United States is moving towards a heavy GDP stance, which that's not a bad thing, but that just means that we would be making, potentially a lot more than we'd be spending in debt. Um, that's far away though, that's speculation, so just keep that in mind as we go forward. That could really potentially be an outcome. So enough of that. FOMC meeting minutes tomorrow. I really don't expect anything crazy from those, but it will be nice to hear what each Fed member is thinking about, because that's essentially what it is each Fed member writes down their notes of what they were thinking about uh, moving into the FOMC meeting to decide the previous interest rate decision. So that's what that is. It's useful. It's not always great, but that's kind of the big data for tomorrow. Now, with that said, I want to see if I can change this. I can't change this over right this second, but there's a very large Japanese treasury auction tomorrow, and that's going to be in the after hours. So Eastern time, I believe that's around 11 p.m. Eastern time. It could be 10 p.m., something around that time. It's very late, but that's kind of going to tell us a ton about that whole treasury situation. Now, what we also have going on tomorrow in the after hours is NVIDIA earnings, and let me go ahead and pull that up one moment. Alright, so I'm just pulling up the whole schedule here, and again, there's really not that much this week, but NVIDIA in the after hours, followed by C3 AI. I probably, totally said that name wrong, but it's basically the company, it's just called AI. Um, we have Salesforce, that's a big one actually. I totally didn't pay attention to that. Um, Salesforce is a very large one. So NVIDIA, Salesforce, um, again, NVIDIA is going to really dictate whether the market's going to be pushing over 600 or dropping back down to, the 580, the 570, 560 range, if not lower. Um, Potentially NVIDIA could be struggling this earnings, and many are kind of anticipating that, just to highlight that a little. Um, a lot of speculators are starting to anticipate that NVIDIA may not do very well this earning. They may they may project a lower guidance. They might just have a lower EPS, but the tariffs are playing a role on their bottom line just a little bit, and I do believe this earnings is going to show us that a little bit. Whether it turns extremely bullish and everyone buys it up and we see, all-time highs again, or whether we see, potentially, like I mentioned, Nvidia not doing so well this earnings, and then potentially the market enters a massive sell-off. Um, that's a very large potential, especially with what happened today. And just to very quickly highlight that, because I have already been rambling enough. Um, Very likely, and again, this is speculation, but I could say 99.999%, the super large rally today was primarily due to the earnings news, or not earnings, but the Fed news with the Treasury auction. Um, with that $46 billion buyback. That was very likely the news that caused this massive gap up, along with, some of the other good news we had over the weekend, like um, Trump and EU working on pausing the tariffs for, slightly longer to work on some more deals and, uh, that whole ordeal. But it was very likely due to the treasuries. And the reason why is, just going over the hourly, this is a really massive gap up, and, this is a huge, huge gap up for treasuries. Treasuries have been getting absolutely beat down, and this is very, very significant buying. Um, you know, really, you're seeing billions of dollars of buying right here. So that says a lot, but again, we need to see if, the Treasury news comes out good, and, that includes the United States Treasury news along with Japan Treasury news. Excuse me. All right, so let's go ahead and jump into this. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting straight into the TA, let me swap to the correct chart. That might help. Going over SPY, opening the moving averages and the Bollinger Bands. All right. So I discussed how today, Tuesday, the 27th, would be a very, very, very good day to set up positions. And even though my expectations of the day changed, I expected to fully test the 5 mile and, fully test the bottom bounds of it too, and not just barely tap it and fully buy upward. But sometimes that's how it goes. We did have our opportunity to set up long calls and long puts. Um, Obviously, the long puts should be red right now. That's kind of their point. They're just a hedge. We won't be cutting those just yet, and the reason why is because we are targeting either that upper Bollinger or the 20 mile. So let's go ahead and jump to the levels really quick. So the market closed today at 591.15 and the 5 mile is at 585.81. So it's very, very likely we're going to see the 5 mile pulling very close to that 588, potentially even close to that 589 range. But very likely, I'm saying it's going to be leaning towards that 588. Uh, with that said, we also have something on the 588, and it's hard to see on my screen right now, but the 10 mile. So tomorrow we are going to have the 5 mile again challenging the 10 mile, and as I mentioned in the Sunday video, that this is kind of the first bear signal. Now if this pulls back upward and turns bullish again, then that's going to cancel out that initial bear signal, and that's looking very likely right now. Let me tell you, it's looking super, super likely that the market wants to break out and head to this upper Bollinger. um, with that said, the 20 miles at 575.65, so it's going to be pulling up towards that 576 area tomorrow. Very likely by the end of the week, if we continue this pace we're on now, it'll be pulling probably well above the 580 range. So massive support, just really, really great support. And if you can see, the 20 mile is starting to pull above the 200 mile. And again, that's what bulls want to see. They want to see all the short-term supports, and by short-term I mean, the 5 mile, 10 mile, 20 mile. We wanted to see all those above the 200 mile. Okay, we want to see that plus the market price. Now, we're not fully out of the woods yet. Okay, we still have a very key support that is still well below this 200 mile range, and that is the 50 mile. However, we kind of have to look at it in two different lenses, okay? Because while that might be underneath the 200 mile here, it is still underneath all of our other moving averages. So if we just kind of ignored the 200 mile, then it would be, you know, the 50 mile, 20 mile, 10 mile, 5 mile, um, all lined up. That's exactly what you want to see when you're pushing upward. Exactly what you want to see. We just need to see continuation of that above this 200 mile range. That's kind of the massive ticket for the bulls right now. Um, as a bull, okay, you should be targeting this upper Bollinger range, and the reason why you should be targeting that, even though it's still quite a ways away, and it's at the 605 range, so a whole $15 away right now. Um, with a good NVIDIA earnings, uh, that potentially beats expectations. Now that we do have a lot of the expectations starting to weigh on the side that they may not make amazing guidance, they may not beat EPS. The NVIDIA bet might start opening up again to where being a bullish bet might actually pay off. Because I know the last few earnings, um, we had great results, but the payoff was just not there because they already sold the IV on the options and they just they basically front run the options and then they move the price after. They screw everybody on their premiums. Everybody knows how that works. We've all been there before. Now, let me see if there's anything else I want to go over with the Bollingers or moving averages. Um, so far, not much, but we are seeing the 5 mile crossing above the 10 mile, which means that we have tested the 5 mile and we are testing the 10 mile. Okay, so what comes after that is another 5 mile test. Okay, because generally the 5 mile is going to be the main thing that happens between each and every move that happens on the SPY. Whether it's the upper Bollinger, 10 mile, 20 mile, usually you're going to test the 5 mile in between each move. So now that we're testing that 10 mile range again, it's extremely likely we consolidate a little bit and retest the 5 mile again too. Um, that's just should be within expectation right now. And the reason why we should have I can't talk, big expectations on that is because they're going to be right on top of each other tomorrow. So they're going to be tested at the same time. The upper bounds of the 5 mile is essentially going to be the upper bounds of the 20 or of the 10 mile, and the lower bounds of the 5 mile is essentially going to be the lower bounds of the 10 mile. So very similar levels on the day for both the 5 mile and the 10 mile. Can pretty much put those two together tomorrow. We are going to be testing both of those levels if we are, going to be pushing down any further to retest support. I do think we will be doing that. That's well within reason to do here. Um, again, we tested the 5 mile. That was very successful. Everybody saw how hard we bounced off that level today. Now we're breaking through this 10 mile. This wick is very thin, so we do have to be careful for that. It's not, I'm not going to go into a candle theory here. That's not my forte, but I do know that that's a very thin wick on that candle, um, with not a whole lot of depth on the top and the bottom. It's just kind of floating in between. So, kind of a nifty candle. If you can see, even though this is a larger one, usually it's these iffy candles that lead to the breakouts or sell-offs. So, um, very likely a breakout or a sell-off coming. It's building here. If we test this 20 mile range, we can definitely start heading down. And with the NVIDIA earnings and everything, that's very, very likely. Okay, if we get a bad earnings. Now, let's go over structure, and you can follow along on your hourly chart. I'm going to be showing this on the 4-hour chart. It works a lot easier on my end. so that I can show this to you all. Now I'm going to pull up the drawings as well. Now, it's funny how that's aligning so well. I mentioned that could turn into an inverse head and shoulders right there, and boom, nailed it. Not exactly what I wanted though. Okay, so let's go ahead and delete some of these. We got that inverse head and shoulders there. That is the bullish handle. Uh, it's not a very large handle, but it is a handle. And we do have many cups here. I didn't want an arrow. Sorry about that, hold on. Okay, let's do this. This is kind of at the top here, and I believe it's targeting this support right there, which, yeah, it's right in that support. How you know that is because it built bear structure in there, and it built bear structure in there. So that is your cup, okay? From the bear structure came bull structure. In this sense, from there came that. As you can see, exact same alignment, exact same size. Very likely what we get from here, we get this filled, and very likely what happens from there is another handle forms, and then you get the breakout. And this 60171 range is super, super key, and let's just highlight this for a moment on the daily chart. It's very key because if we break above that range, we are breaking the major selling channel, and that will basically kind of destroy any bearishness. If we break above that with, some actual, I can't think of the word right now. If it actually holds and stays there for a few sessions, then this entire buying channel expands to this support right here, and this is now an entire buying channel, and this bearish structure totally invalidates. Okay. If this doesn't break out though, if this does have a rejection, which I still think that's a very possible potential right now, um, then again, we can be looking for this inverse cup to start filling out. We can be looking for this head and shoulders to start filling out. Technically, we do have the left shoulder built, we have the head built, and just quickly showing this on the 4-hour chart while deleting a couple of these lines because we don't need to see them all. And technically, this can be a inverse cup as well. And let's just go over that really quick, and then I will call the video there. But this was, losing my voice again, this was a massive chunk of liquidity right here. Okay, we didn't fully take this gap. There's still almost a whole $10 on that gap right there. And let me change this to purple so you can see it better. I'm going to make this a little thicker for visual. Now, potentially we can be building a small head and shoulders right here. And if that does happen, then what will that create? That will create the inverse handle on this cup. Okay, and what that does is that builds the liquidity to push downward. Okay, and this would then turn into part of the head on this larger head and shoulders. This would give us the structure to break down and create that right shoulder, and from there we would be able to start looking down further. But until this happens, until this breakdown happens, you really cannot be bearish here other than hedging. The bull structure is very, very, very good. Today kind of needed to be that breakdown. Tomorrow can happen still. Again, the video can change a lot, but um, yeah, you all see what I'm saying here. If this breaks up, then we're going to break above that major selling channel, and it's kind of game over. We're going to move to the upper Bollinger. That's going to push basically all the way to the 609 range, and then we come down, retest support, and move on from there. Um, if not, then we test the 5 mile, reject it, and head to the 20 mile. So that's what we need to look for. Um, Continue to see if we see further breakout, and this can be tricky in here. I'm not going to go over this too much, but tomorrow can pull down and make this look like a head and shoulders while still being a handle on this bullish cup. Okay, because this can turn into a very large bullish cup. This can be a micro bullish cup right now. There's the liquidity right there, if you can see, basically right at that 591 range. They hit it exactly. They can pull down, build a handle, then break out. So anyway, I'm going to end my spiel there. I hope everyone has a great trading day tomorrow. Make sure you're hedged for the NVDA earnings. I posted some options yesterday in my Dave's Play chat, but if you did not see those, I'll try to post those around in some other spots as well. And we will edit the list a little tomorrow just to rebalance some of these positions because some of the puts are not correctly weighted now that we've completely gapped up above them. So we'll go over the puts, we'll go over the calls. This isn't the time to be exiting positions on either side too much. This is kind of the time to just hunker down, make sure you have calls and puts, or if you're in equities, then hedge some, SQQQ or SOXS, stocks or SQQQ, just to get some inverse, uh, weight against your equity. I can't talk against your equities, so that if we do have some massive sell-off tomorrow, then you catch some of it. And you can also trade the VIX as well. There's many different very good symbols for that. There's UVIXY, there's UVIX, there's SVIX, which is the inverse of VIX. You can even trade VIX options. I personally don't like VIX options, but that's my personal opinion. Anyway, I'm done. So everybody have a good night, trade safe tomorrow, and let's make money.